Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. On yesterday's video, I laid out some new objectives to the upside that I expected to be hit. One of the targets I laid out was a move on the S&P to the 3638 level. We printed 36.45 in the first hour of trading. Early on in the session, it was all about the COVID vaccine from Pfizer. We saw amazing euphoria and markets were going up across the board. And about a third of the way into the session, everybody started to realize the stay-at-home trade was over. Humans were going to be able to congregate again. This means we're going to be able to go to office buildings and work together and be social beings like we always have been. And then we saw the massive selling coming into the NASDAQ. All of the favorite stocks, the Zooms, Peloton, all of those just got crushed. And we saw the markets just start to come apart, and the selling in the NASDAQ fed over to the other indices. The Dow Jones was up over 1,200 one stage. It sold off to be up 800. The S&P finished substantially off its highs. And as I discussed and I mentioned several times in yesterday's video, for us to get a confirmation of these much higher prices and projections, we're going to have to get a close on the futures above 35.76 and on the cash 35.88. We did not get that close yesterday, and overnight we're seeing further weakness on the NASDAQ and the S&P. All of a sudden we're trading back to the low 3,500 level. This activity is certainly unprecedented, and the whipsawing action is far from over. Volatility has kicked up substantially. The underlying trends are still expanding to the upside, so there's still going to be an underlying bid in these markets, primarily in the S&P and the Dow Jones. The NASDAQ may have a bit more of a problem. This plays into what I've been talking about for months, is that long the Russell, short the NASDAQ trade. That trade worked incredibly well today and looks like it wants to break out. This is exactly the leadership change that we need to get these markets to stabilize and actually move higher. So as crazy as all this seems, we did not change anything from yesterday's analysis. What we've set up again is more consolidation before we're going to be able to move higher. There'll be some critical numbers which I'll unpack in the technical section here in a few minutes, but make no mistake, the underlying bid has not disappeared as of yet. The next couple sessions will be critical as we go to fundamentals today. Virtually nothing. About 200 earnings reports coming out. Not sure anybody actually cares. Not sure what will drive the markets over the next couple of days as the uncertainty continues. The election still is not over, even though the media has claimed it is. None of these states have been certified, and until it does and the GSA signs off, it's not over. And we could see this thing drag out for a number of months. There's, I believe, 6 or 7 lawsuits that have been filed. There's just a lot of stuff to go on yet. Whether Biden ends up winning or not, we'll find out, but not for a while. It's likely to be possibly into December or beyond before we actually have a certification of the election. That's not going to help get anything going either. We're going to continue to see this uncertainty unfold until we get the closes on the S&P. We're not going to see these markets triggered to higher levels. It looked like it was a shoe-in early this morning that we would get a close above those numbers of 35.76 and 35.88 on the cash. As we know, that didn't happen. Let's go ahead and take a look at the charts, see what they're telling us for Tuesday. As I begin with the WaveTech database overview, we did see quite a few new buys coming out of the short-term models. We had roughly 3,200, only 300 sells. So we had a bullish ratio push the percent bullish up to 57%. The trade duration expectation is around 40 days. As we look at this right now, the current average duration is only 4 days. This suggests that we will be in an uptrend for at least the next 35 to 40 days on a short-term basis. This will keep a positive rotation, keeping more stocks being stable to moving up than going down. And most likely what we're going to see is that shift that I talked about, which I'll show you in a minute, from the Russell and the mid-cap as we start to see that rotation start to kick in. That shift will also be related to the vaccine and bringing other elements of the economy back on. You saw a lot of the airlines move sharply higher yesterday. In fact, our airline strategy, all 8 of the airlines that we have in that strategy, I'll be talking about that at the WaveTech training. This database is continuing to move forward. This is what I was suggesting in the opening comments, that there is an expanding underlying trend going on. The first thing that I will review tonight is that Russell NASDAQ trade that I've been talking about for months. We saw a sharp reversal to the upside, and this is likely to continue to move higher over the next several weeks. It has a lot to do with the rotation that we're seeing in the database, both on the daily and the weekly. So we're going to see a continuation of this pattern. Many market participants might think that yesterday was a reversal and a climactic peak. I don't see it that way based on our rotation in our database. So expect to see some choppiness. I don't expect to see any sharp sell-off coming from this type of configuration, especially because this trade is beginning to work. Now as we go over to the weekly pattern, you'll see that this thing is really starting to get a rounded bottom. We're going to see this move up substantially in this pattern, which is going to switch that leadership. I've been harping on this going back to July, but this pattern will unfold, and this is a long-term trade as the economy comes back online in the months to come. Before I move on to the market indices, I do want to bring up the Treasuries. The Treasuries printed 9.58. It appears they're going to continue to move between 1% and 1.2%. And this also has a lot to do with that mid-cap and small-cap trade. These higher yields are going to help to drive several elements within the economy, primarily in the financial sector, as a lot of small and mid-cap stocks and the regional banks and other financial institutions exist in this space. So this is actually a positive. We're seeing all 3 PPMs kick in at the same time. The weekly chart is just beginning its breakout. I've been discussing this bottoming pattern in interest rates for some time. And the last thing we'll take a look at here is the yield curve. And the 1030 spread has continued to steepen. This will continue to unfold over the months to come, and this is exactly what the Fed wants to happen. I've talked about this in detail in the past. As I begin with the S&P cash markets, we did see them close up 1.17%, up 41 handles at 35.50. The high was 36.45, and as I mentioned in last night's video, the short-term objective was for a move to 36.38. We have already satisfied that objective. The range was 36.38 to around 36.42. We printed 45. Market reversed from there, closed substantially lower. But the configuration on the PPMs here, I added the PPM 200. You'll see that all PPMs are turning up, suggesting that the entire shift on a short-term level is indicating that the short-term trend will continue, and we're likely to move back up toward the highs that we printed today, but it will take somewhere between 3 and 5 sessions. The critical level on the downside will be 34.96 to 34.82. If we get a decline into that level, it will be critical it holds. And then a close above R1 today at 35.64 would be very positive. Now, currently, the futures are down about 8 handles. They are rallying back pretty strongly as I'm doing this video. But as we look at the market grid for the S&P cash tomorrow. 3364 is R1, S1 3536. I would look for an S1 R2 trading zone for Tuesday's action. As I continue with the S&P cash, looking at the weekly market grid, it traded up to the R3 number yesterday, which was 3647. It was a spot-on hit. We hit 3645.99. We reversed off the R3 number and closed back at R1 at 3552. Now the critical level on the weekly chart is 3466. I don't see that number being reached after the action yesterday. If we did see further weakness, the numbers I mentioned at the 3482 level will be critical. 3466 level will be the extreme support in this pattern. But once again, as we look at the PPMs on the weekly, we're continuing to see them expand. The PPM 3 has downticked a little bit, but the PPM 1 and PPM 2 are still in a very positive position, both in a 0.36 on PPM 1 and a 0.65 on PPM 2, which is a very strong uptrend. This suggests we will see this thing hold together as this week unfolds. Taking a glimpse at the S&P futures, overnight we're down 525 now. They were down about 22, 25 handles, so we're seeing a big rebound. We're coming into about an hour before the London opening, so we are seeing some recovery coming on. As we look at the market grid for today, R1 is 3568. We printed a high so far today of 3562.75, so we're moving up toward R1. S1 is 3519. The low's been 3511. So we basically have an S1 working on R1 right now. My expectation is we'll see potentially up to the 3595 level on R3 as we go through today. The volatility is likely to stay very high over the next 2 to 3 sessions. Next market I'll cover is the NASDAQ. Starting with the NASDAQ futures daily, in yesterday's action, we traded right to the extreme level. RXT was 12,476. The high was 12,408, fell just short of that. And then we saw a reversal from there, closing at 11,820, which was very close to an S2 close. Overnight, we've seen further weakness. As we look at the grid for tonight's action and tomorrow, the low has been 11,681. S2 is 11,622. We probably have satisfied the low for the session. 11,914 is R1. So similar as in the S&P, we're printing between an S1, R1. Expectation is to see this thing move back toward an R2 level. 12,018 is the likelihood. If it did penetrate through 11,727, then we would see 11,622 to 11,518. There's also some moving averages that will come into play. The 21-day moving average is right at 11,643, which is basically S3, and the PPM1 is neutral. The PPM2 is neutral, so there's no real upside potential there. The extreme would be the 40-day moving average, 11,482, close to an S3. So that would be the extreme setup. Expectation, just like in the S&P, we probably have printed an S2, look for at least an R1, possibility of going to R2, which would put us back at the 12,018 level. As we review the weekly NASDAQ futures, yesterday's high was 12,408. R2 was 12,469, so we fell short of the R2 number. S1, 11,888, and then S2, 11,680. The low yesterday was 11,681. Since this is the weekly configuration, we're likely we've seen the low at that 11,680. 11,444 is the 10-week moving average. That would be a move down to S3. That's certainly possible, but it's likely that we have seen the upward end of the range this week, and we're just trying to establish a low in the NASDAQ. Should move back toward 12,000 260 in that level over the next couple sessions, but it will be critical that we hold this 11,472 level. The final market that I'll cover tonight is gold. Yesterday we saw gold absolutely crushed as the market was moving higher. I think a lot of it had to do with the COVID news, but we traded down toward the extreme again at that 1851 low that we printed several weeks ago. We had a low yesterday of 1848 and bounced right off of that level. We're currently trading 1885, and it looks to me that we're going to rebound back above the 1900 level and move toward this 1913 level. We are seeing a convergence of the 10-week moving average and the 21-week moving average. They're both at 1913. It would take a close above that level to reverse this market. We will see a substantial amount of resistance between 1904 up to that 1913 level. The daily chart got the opposite of the RXT sell. We got an RXT buy where we closed below the grid. We're going to try to move back toward the moving averages on the daily, which is 1903 to 1906 are the numbers that I just discussed. Most likely we will remain under 1913. I still don't see that a major new trend is developing here in gold. We're up 30 handles overnight, up 1.66%. Like I said, expect to see this thing move back towards 1900 to around 1906. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.